Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsome with reallifetrading.com. I hope you are doing phenomenal. Got the SPY here on the board, and as normal, look at it every single stock review. Looking good, just slowly grinding higher. I kind of posted what I felt like would be worst case scenario on SPY. Posted this earlier today, and I'll talk a little bit about this. A lot of real life traders are already in bullish, of course. Long-term shares, calls, SPY looks good, slowly creep higher. But here's kind of what I think is worst case scenario. And I do think that there's going to be a semblance of this regardless. And I'll talk about that in just a second. But here we go. And what makes sense to me is if we do break higher in late July, this is when all the newbies are going to hop on bullish. And that's probably when the market will actually rotate down a little bit. So I think something like this is going to happen pretty much regardless. Best case scenario, though, is we just bounce right off and just keep ripping higher, and we'll be making new all-time highs before the end of the year. I think that's certainly possible. Strong scenario, actually. This in blue is just what I think is worst case. What would be phenomenal, though, is if that happens, it'd come right in towards the Santa Claus rally, and that would make for some really fun trading opportunities. Because remember, I mean, you can make as much money as you want on a move like that, especially with the SPY. So realistically, again, very nice bullish gap yesterday, nice higher high today. Market just closed, and at this point, just looking for a break above this resistance. But again, I would buy the dip of that because you should have already been in bullish. I mean, you got a good bullish candle here, good bullish move. I mean, that was the breakout really last Friday. And as far as real life traders, we already have a lot of bullish swing trades going on. So my thing is, as we break higher, right, that would be the nice S-curve type of pattern. Look to sell, probably trade back down, and then hopefully something like that. Obviously, this is kind of best case scenario. So we'll figure out exactly what happens, but that's kind of my longer term thoughts on the SPY. Did not have tons of requests today, so I will look at the ones I did have requests for. Let's go ahead and check out Spotify. Had a request saying, what's my target for Spotify? And this one played out really well yesterday. So I day traded this one yesterday. For those of you who follow me on Twitter, you were kind of getting my updates. And let me talk about why I day traded it. So back to the daily. And on the daily charts, I honestly just pulled up Spotify because someone was talking about it. I noticed that it was at its previous all-time high, right? You had this little resistance. And you had a super small little upper shadow on what day was that? Wednesday. And I noticed that Spotify was indeed just posting a really, really tiny gap. And so I watched it, and it just played out very well. Got 2 R's on Spotify. I did lose 0.8 R today, and I'll talk about that. But that was to be expected, actually. I'll kind of discuss that in a second. But anyway, where do I think Spotify goes from here? 200 is going to be a no-brainer. This is going to be a stock that's just going to keep surprising people. I think that Spotify is overvalued. And a lot of people probably think that as well, and every time people try to short it, it just keeps going higher. You had a really stupendously delicious S-curve right here, pulling into the 50. I mean, look at that hammer of Thor. Beautiful hammer candle type of breakout above. Nice little Marabozu right there. Good trade on Spotify. Nice little rotation. So at this point, I do think 200 is in the bag this year, but if I do a quick fib, and put it right there, and then do this. Oh yeah, look at that. Look at that. So 201.37 followed by 232.98. Those are going to be my targets on SPOT. It did have a retest day. You are at new all-time highs. So I know that a lot of you are out there looking to short Spotify, but I'm here saying if you're looking at doing that, just be patient. Let's go talk about a trade that I missed on real badly. McDonald's. After I missed this trade, I just packed it up for the day, went and got a haircut, came back later. It just, man, this was brutal. Here's the 5-minute chart. I'll kind of scroll up. Again, this is the exclusive chat pane for any of those in the real life trading rooms. And I'm just kind of keep scrolling. Brian always posts these. That's hilarious. So I'm going to keep going. All right, so here's my post on McDonald's. So this was, what time is this? 8:34 a.m. So 4 minutes after market open. Here's what I was looking at on McDonald's. Stock broke down, and this was pretty much in real time. So since I set up the trade, this wick had already happened right there. unfortunately. Right, so I was setting up the trade. The wick happened, and anyway, whatever. So that was the setup. That was the posting on McDonald's. Now I'll zoom into the 1 minute chart, and you'll be able to see what happened. And it's okay that this occurred, but it emotionally got to me a little bit because that would have been a nice 1.5 hour trade. Okay, so here we go. And what you'll notice right there, so this was a very, very good breakdown right early in the morning. My entry was right here, 5 cents above the wick of this candle, 5 cents. Just did not fill and then just rolled right over. Would have been a really, really nice little healthy trade on McDonald's. So that's what happened. Now, so on Square, ticker symbol SQ, had some traders looking at this one, and they mentioned that it was weak on the intraday chart. So this is a trade every Friday. Usually I will look for an option trade expiring that day, something really, really cheap, kind of as a lottery ticket, right? It's like a just in case. I do see a lot of strength on Square, very nice bullish trend, but it did have a retest gap. So here's a white candle gapping up. So I was going to see if it was going to pull down a little bit more. Plus, you kind of had a little bit of a series of lower highs. So I'll zoom in and show you how I played Square. It really wasn't that bad of a trade. But this covered call will expire worthless next week. Tons of real-life traders are in on Square, and I do think that it's going to continue to go higher. Most likely we'll get something like this, and I could say if Square does not rotate down next week into the 50 and we break out of here, we're going to run up into the mid-70s into earnings, which are just 2-3 weeks away. So anyway, I'll go into the 5 minute chart, show you what we played on Square this afternoon. We only had a 15-cent risk on an option, so it was really worth it. But here it was. So once Square took out this bullish candle, this pivot, and these pivots, once it broke down, we shorted the retest. It did try to roll over and just never got there. So if it would have gone to here or here, that would have been a 4R trade. So it was worth the risk. Now, while we were doing that trade, here's what the Qs did. So I did feel good about the timing. I actually feel really good about that risk. But here's what we got into on Square was right there. So we got triggered in Square there. The Qs did have a 30-cent pullback, retested, traded higher, and once that started happening on the Qs and Square didn't go lower, I knew we were going to lose on that trade. But that's all right, not a big deal. Now after that, so we were watching this afternoon. This one was a very small gain. Johnson & Johnson. This I didn't actually trigger in a Johnson & Johnson. I'll show you the small gain. The Johnson & Johnson, watched that most of the day. Missed our entry by 1 penny right here, which was actually a good thing because we would have won, but very, very, very small on that trade. Move this over here. So I'm just trying to pull up this small winner. It was on AVGO right there. So 12.54 said late in the day possibility for AVGO. Here was the chart right here, 203.10 by 204.84 AVGO. Watch this one to continue lower on Monday. It had some really good weakness today and had a good, very, very nice breakdown right here, pretty much during lunchtime. And I got in based on the 15-minute chart. So here's the 15, right? Had this like little pattern right there. Broke down, retested. So we got it right before market close for 0.2R. So nothing special. So overall in the day, down 0.8, right at 0.8, 0.793, something like that. And so for the month, yesterday was at 6.9. So right now going to be about 6.12 Rs for July. Now the cool part is next Friday's payday for me because there's a lot of options expiring next Friday. I'll go through some of those. But have a put sale, a lot of option sales out there. IQ, so I have a put sale on IQ at $20. It's not on the chart, but it's, I forgot, I didn't just add it back, but Seagate, I sold a put on Seagate somewhere right around here. $50 put expiring next week. Apple covered call, ticker symbol AAPL. I've already showed you the covered call on Square, so there's Apple up there. And I do have a bear call spread on Google, which is going to test my skills for timing. And it's a 12:20. So I have a whole week on Google. I'm going to give it a little bit of time to likely retest because this is a retest gap on a weekly, but we did close above an all-time high on Google. So I'm not going to give it that much time, more or less what I'll probably do is I'll be waiting, let it retest, and then put an entry out there to exit if it bounces, because Google has some really good strength, and I'm absolutely looking forward to and expecting Google to continue higher at some particular point in time. And last but not least, have a put sale on Micron Technology expiring next Friday as well. So next Friday, I got about an R or so on the table of premiums. Yeah, so I'll keep you posted and figure out what's going on from there. A few other stocks that were requested. Here's BLOZF, which is a medical marijuana penny stock, cannabis technologies, and here's the daily chart. So very kind of, I wouldn't say undisciplined, but a little choppy. Obviously, it's a much lighter volume than most stocks, but it does look pretty much like most OTC medical marijuana stocks right now, with that surge towards the end of 2017. Big surge, big pullback, a lot of weird, just very fast and riveting candles. One of the easier ways to play a stock like this is do an absolute zero play. Meaning, let's say your risk is $400, take 400 divided by $1.71, and that's how many shares you can buy. And that way, you can control your risk exactly at 400. So if it goes to zero, you're only going to lose $400, which would be 233 shares. Otherwise, if you're playing it a little bit more aggressively, probably going to be based on either pure speculation or technicals. I would say I would wait one more candle, and let's see what tomorrow gets. And if you get a little bit of a bullish candle like this, kind of like a little morning star pattern, your entry would be above here, and your stop loss would be probably conservatively below some of these giant candles, or the most aggressive would just be right under the low of today's candle on this one. Can I give a shout out to my good buddy Troy Beinhauer with his bull put spread expiring worthless today on Tesla. He had a 305, 302.50 bull put spread, placing it under those long-term moving averages. Keep your eyes on Tesla, because that makes 3 days in a row of which it's closed in between the long-term moving averages. So at some point, Tesla's going to have a little bit of a pop, and I'm looking for that to occur, possibly do some bull put spreads or put sales, maybe even over earnings. We'll just see if we break out, how we break out. Got a late request for EEM. This is the Emerging Index Fund. And on the weekly chart, this thing is pulling back, and it does look toasty. Have to agree, very nice trend, good pullback into the 100 on a weekly. I would have really liked to gotten in this week on EEM, because you have an inside week last week at a hammer-ish candle off the 100 on a weekly. Entry would have been right above that high. So yeah, if this thing pulls back a little bit next week, or even breaks higher or breaks above the week today, I like it. Looks nice, and yeah, if you're buying down there, it makes sense. Here's Lockheed Martin, up 1.62%. Also bouncing off the 100 on a weekly. As you can see right there, very nice inside day candle. Here's the daily chart, and you had a really good bullish gap and go just yesterday. And will likely trade back up into the 325 area on Lockheed. And then earnings, we'll just have to see. Because we did play Raytheon bullishly with the weekly options newsletter. So there's a lot of different traders in on Raytheon with a few different setups, but really set that one up pretty classically. Today is Friday. It did not do anything, obviously, on Tuesday, but I'm sorry, this was Wednesday right here. But broke out, had a nice gap yesterday. Here's the hourly chart on Raytheon. So again, we were looking for that, pretty much what happened. So that was kind of cool, just kind of conjuncturally with Lockheed Martin. The 200 simple, a little bit of a target there on Raytheon. And I'm going to do a quick email, really quick, an email that I got earlier today. My good buddy Tad shot me an email, and I think this is a really cool email to read. I talk about this semi-often in the afternoon swing trading room, but I just loved that he brought it out in an email. Really spectacular, and this is a true testimony to just how much information you guys can glean from just kind of what I talk about in these reviews and in my emails and in my articles and podcasts or whatever, afternoon rooms, morning rooms, text. So let me just pull up my inbox and click on, where's Tad? There he is. And so Tad mentions, thanks for the MU trade yesterday. I looked at the chart and thought if it got Jerremy by not going down, it must be heading up, along with it looked like a long. Meaning, so yesterday, was it yesterday? No, the day before yesterday, on this day right here, the 11th of July, I took a bearish day trade on MU and got stopped out of it. I lost on Micron and lost about 0.91 Rs on Wednesday. So the reason I'm bringing this up is because, remember, if you guys see or hear me do an analysis on a trade, and I get into a trade and I set that trade up, and then I end up getting trapped or stopped or caught in a gap or something that's going against me, you know that someone's in that trade losing money, right? You have first-hand experience that someone is in, aka me, being trapped. So that's the candle sentiment at its finest. You know someone's trapped, you know someone's hurting, you know someone's losing money. So play the opposite direction, which is beautiful. My buddy Jesse James Levan got into some call options. Sandra's in some shares. I do have a put sale down here on MU. So all things considered, Tad's was like awesome stuff, man. I love that analysis. And I got to bring up MGM Grand because this is a stock that I've looked at on Monday's Real Life Stock Review and Wednesday's Real Life Stock Review, and I'm going to look at it today. We traded this, and in the stock reviews that you guys are getting access to, could have day traded this one 2 times because this is when we looked at it right here with this candle, right? That was Monday. I played it on a day trade Tuesday. Could have played it again Wednesday. Set this exact trade up right here, the one that you see in front of you, based on this wicked pair candle pattern. Set that trade up right there on Wednesday. Got triggered in yesterday. Hit target 1 today, and trying to exit the rest up here on MGM Resorts. Hopefully that helped. Hopefully that works. We'll see. But hey, just following along with that particular stock. Nice little setup. Nice move. I like it. Good stuff. One last one to review, and then I'll have you on your way for the weekend. Here is Under Armour, ticker symbol UAA, down 1.92%. Glad it's happening. So here's the analysis on Under Armour. It is slowly recovering. It is an accumulation pattern. So here's the monthly chart, and it's just banging its head against the 100 on a monthly. This is going to take some time to form an inverted head and shoulders pattern down here. So give another 2-3 months of sideways movement, but beautiful trend up, beautiful trend down, Dow theory at its finest. This is an accumulation phase. It's going to take a few years for it to really recover, but as Under Armour's down here just chopping around, here's a weekly, and you have the 100 on a weekly. I mean, it took out the low of this candle, which says to me that we're going to probably trade down maybe to 19 or 20. If Under Armour does that, I think that's probably a decent buying spot. I know earnings is around the corner. I might even look to sell some puts myself on Under Armour down around the 18 region over earnings. I know how they make money. A lot of people, wear Under Armour. They're coming back from the dead, if you will. And you gotta love right here this retest gap. I mean, this was immaculate. Nice retest gap, retest 1, retest 2. That 200, right, just held up all that support. Very easy to see. So throughout here, you obviously had to know that it wasn't going to be bearish. So nice run up, looking for a little bit of a correction and a pull down. And then I think on a 2-3 month time frame, the $19, $20, $18 area would be a good buying spot, and look for a slow recovery on Under Armour. That's my thoughts. Folks, thanks so much for tuning into your Friday Real Life Stock Review. Hope it was helpful and beneficial. You rock, and I will see you later. I got about 40 minutes before I hop into Finance Friday. For those of you who are in the afternoon swing trading rooms, thank you for helping us enrich lives. You're amazing people. I'll see you later. And until then, love life, live life, trade it.